And good evening, everybody. This is the Hawkeye session. It's Wednesday evening. We're going to go from 9:30 to till we get done, and which might be a little bit early, might be a bit later, but we'll be here for at least about an hour or so. We'll get the disclaimers out of the way. Trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a live trading room. It is for educational purposes only. No financial advice or recommendations will be provided. Any trade taken during this live session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money you cannot afford to lose. And before trading live, always operate with a written trade plan that identifies rules for entries, exits, targets, and risk management. Now, having said that, we'll get it out of the way. We're going to spend a little bit of time just going over some of the basic step-by-steps and answer any questions that we may have. And just, I don't have any real active trades going on right now. There was one, there's an Aussie US trade at 7:15 East Coast time. I was able to get in. I'm in of that, out of it. Got about 15 pips. It was a nice trade, but that's already done. And so we're just going to ask for questions from the gallery and the attendees and see what we can do to clear up some misconceptions or make some things that may be a little bit vague more clear and understandable. So, Pedro, go ahead and ask your question. I'll start with a fresh chart, and we will
make sure we
see where we can go with this. Yeah, just get my screen up here, and I change the screen. Yep, we need to do that. And see, share. Okay, so right now I have I'm going to just put a fresh, clean. I'm going to just make this a clean Aussie US. And I'm going to take all the indicators off here. And we're just going to start from scratch. And we can go over. So Pedro, what was your question again? Let's just take that right from the beginning. We'll see if we can't do this step-by-step analysis of how we do things and what we're doing.
Yeah, thanks, Al, for giving me the opportunity to ask a couple of questions and to clarify. So I was wondering if you could help me understand a little bit better and read the indicators of the fib retracement and then the trend base fib extension.
Okay, we'll just start off with one. The fib. Are you talking about these fib lines right here that we're looking at?
No,
I shared my screen there, did I?
No, if you go on the indicators line, like the second on the left, all the way on the left, with you have all those indicators, the trend lines, all the way on the left. Yep,
over
right
here.
So the second one.
This one.
Right there.
The Fibonacci extension. Okay, let me go.
Yeah, it's the Fibonacci extension.
Yeah, it's called a Fibonacci extension.
And the Fibonacci retracement.
Okay, what this one will do. Now I've got mine set up probably a little bit different than maybe some other people do, but basically what this does is, let me start over with this. Basically what you'll do is you look for a long trend and then you look for a pullback. And what this will do, I usually start with at the the high end, I guess, in this case, going low to high or high to low. I pull it down to the bottom, I click it, and then I pull it back up, and I usually bring it back up to wherever it has retraced. So basically what this does is it shows you a range, and then it shows you how much is retraced of this range. Now, the way I have mine set up is that as I pull, if I go right from here, you can see like right now, I have a zero, here's the anchor, here's the fixed, these are the fixed points. Right now there's zero retracement. You can see where if I look at this line, it says zero. As I pull this back up, let's see. So right now, where this blue line, it says 23.6. These are all standard Fibonacci numbers. And as I pull this thing up, I'll read how far it's retraced of this as I read through here. So as I move it up to where this is right now, I put the 0 right where the top of the retracement is. That's where I put my 0 line. And I come down here and I read which line is as closest to the bottom. And you can see right now, where this is right now, this is retraced about 61.8%. Actually, right here would be the 50% line, 0.5. And that means that this move would have been retraced 50% of this move. So if I take it all the way up here where the 0 is right at the top of where this wick is, it's showing it's retraced right now about 61.8. And these are Fibonacci numbers. The way I have them, what I can do is I'll give you the settings here. This is where the chart's set up. You have the trend line, which is just have that yellow. You can see that, actually I don't even have, that's this line right here. These are the trend lines. And then we have these are the different values of these other lines. And you just have a 0, I have a 38.2, a 61.8. These are basic standard Fibonacci numbers. And so those are the two extensions I have in between the 0 and the 1. This would be the 0, this would be the 1. So this is the full length of this move. And then these are all fractions of that move. So actually, I could have this one slid over, but anyway, I have the 38.2, 61.8, and this is the 1. Now these are extensions. This would be like a 2 times this length plus 61.8. I won't worry too much about these right now. These are not really too important, right, for what we do most of our time with. The main ones you want to look at is 38.2, 61.8, and I've got the 0.05, 78.6, and the 1.61.8. Those are all basic Fibonacci numbers. This one is basically just the extension, so that if it goes, that's how much of the overshoot it would probably be. So if I put this right on the wick, this is the area that I'd be looking to see for it to retrace back to. And oftentimes what will happen is as it pulls back up to the extension, if it stays within 50% or oftentimes less, like 23%, here's the 38.2. Now I have a 40 in here too. I just help to use that to identify this area. But as it pulls back, if it pulls back that far, usually within between 38.2 and 61.8, oftentimes when it does retrace, when it goes back this length from here. And that's where this 1-to-1 comes in. So in other words, like if I take a stick and I go from this area to the 1, let's see if I can, here's my stick. So if I just take it from like this area to the 1, if I were to measure this, you'll find out this should be the full length of from here to here. You can see that that's the same point here. And that's measured from where how far it's, so if it only extends, let's say the price of it was only like 23%, I would take it from the zero line to here, and again you can see that puts me right back down. So this is where my target area would be. Does that make sense? Is that clear?
Yes.
Or did I lose you?
Can you hear me?
Yeah, I hear you.
Yeah. Yes. No. You were that made sense. Thank you.
Okay. So does that answer that question that you had there?
It does.
Okay. Did you get those numbers? I probably could have had that set up a little bit differently, but I know this just kind of, now a lot of people, what they'll do, now this is the Fibonacci extension, and actually you'll see that if I do just a regular Fibonacci, it should be pretty much, if I go from here to, oh, I got this on the wrong one, to here, and just do a regular Fibonacci, see if I can find what I have one. Let's see. I think this might be it here. You'll see that there's a 0, here's the 23.6, here's the 70. You see these all line up with the same numbers here. So it's the same distance. And I could put a 50% in there as well. But I don't use this one too much. I usually use this one more than anything. And if I just take this and bring it all the way back up to the top where the 0 is lined up with the top here, you'll see these numbers would be the same as what you have over here. If I pull this back down to the full length, you'll see these numbers will all line up. So this is basically the same thing as if you just pulled it back up to right up to the top, you'll see those would be the same numbers. But what this does, it allows you to get that retracement figure so that what you're really doing is you're looking to see when it pulls back and when it breaks, because this usually these are like little flag patterns. And so oftentimes once it breaks the pattern from here to here will be your target, because usually it would go to that full length. Oftentimes it'll go that full length of what this move is again. Okay. Let's see. So and now that's this Fibonacci, and the other Fibonacci what we have, which is part of the indicator that we have, and these are all just with a fixed points, fixed numbers. These are ones that a lot of the institutions use. It doesn't have anything to do with the price action. It's just strictly numbers on a line, on a number line, and they're all set up in. Basically, what it does is it gives you a system of thirds. So if I'm looking at a blue zone to a blue zone, is usually these are the two reversal areas you're looking at oftentimes. And you can see that, let me see if I can find another better one here. Well, that's okay. Yeah, this is, and if you take a measurement, let's see my regular tool, where is it here? This one. If I go from the blue line to the blue line, let me find my other template here, my blue-green. Let's just do this one. You'll see that these are all thirds. These are all pretty much on a clock of thirds is what they are. And each one of these, if you divide each one of these lines into thirds, that's really what the next number is. Like, for instance, these are on the 5-minute clock. So all these prices on this one should be about 21 pips apart on the 5-minute. From here to here's 21 pips, pretty close. And so that's where, if I put these onto a 2-minute clock, this can divide this one into thirds, which is pretty much what I have here. So if I change this to a 2 minutes, you'll see that I now have the blues are still there, but now we have the other. Here's a third, here's a third, here's a third, and they just have the range from a blue to a blue, but it's divided into thirds. And these are all standard. They go pretty much all the way. They only default to a certain amount above and below price, just so we don't have to 200 lines drawn. And that's what that one is. Does that answer your question?
Yes.
Any other questions that we can help you with?
Yeah. So when you use the retracement Fibonacci, and for example, it's at 25% or 0.25 or 30, do you wait for like to make another retracement to make another, I mean, not retracement, but another I forget now the word, another trend line? You looking for another trend line, like up and down?
Are you talking about are you talking about the extension tool? You talking about this one?
Yeah. So once you do that, now.
Okay, so let's say I'm just looking right to here, and I snap it there. Okay, so now.
Now, so let's just say that you thinking, you after analyzing, you think it's going to continue to drop.
Right. So right now I'm thinking this was the first drop. This was the pullback, and now I'm looking to see if it starts to drop again.
So do you wait like for to do what oh boy, what's the word?
Do I wait for it to like break another trend or like?
Yeah, to make another trend.
Yeah, because actually, if you really look at what this is doing, if in the reality, it's what it's doing is in this particular case right now, it's actually starting to make another flag pattern. So, or another wedge. I mean, you can, and a lot of times, if you'll see me, a lot of times, if let's say you see this price come down and zigzag and then go back up again, oftentimes you'll see me put this top layer. For example, let's just say we use this candle right up here. And I use that for the reference. So I'm going to bring it on up to where the reference is. Actually, let's do it this way. Let's just say all these others aren't here yet. So I bring it up and it retrace back up to the top of this red candle. So I bring this right across to put it right on the top. And you can see now I have another slope, which is basically, is actually making another wedge. If I draw this from here to here, back to, let's see, let me put it down here, put this one up a little bit higher. Let me just move this one out of the way. You can see actually we have another wedge right here. Would you agree? So like from here
Yes,
to here, and let's just say we put it right on, say this little red candle, okay? So right now here's kind of a wedge. So now let's just say let's say all this other stuff isn't here yet, okay?
Mm-hmm.
So we're gonna move this up over to the top. I'm gonna move it down over to my pivot low. And then I'm going to move this up, and I'm going to bring this up to where this yellow line up here aligns with my A, flat right across. See if I can do this without it. And snap this here, that might help. Yeah, there we go. So I'm just going to move this right over to right even with where the A is, A and C pretty much. And you can see you almost have kind of another little bottom of a wedge off of this. And so, I mean, you can sort of, as you move this out, you can see how this thing kind of goes up and down. So what I'll do, I'll try to align it a little bit. And then I can use the bottom of this yellow line, sort of like the bottom of that wedge, so to speak, okay? And then if it breaks, so let's just take it from this area right now. Let's say we're going to take this off. And we're going to be looking at this whole move right here, from this move here down to here.
Mm-hmm.
And I'm going to flat top this. Take that off. So right now I've got a little triangle. Here's my wedge triangle. Now it hasn't tested the bottom. This is no different than if I were to draw
The wedge.
The wedge, okay? And I can put the wedge down here on this line. And you see right now I've got a wedge.
Yep.
Okay, so we're good there. So oftentimes, if I'm able to, without having to draw this other wedge, I'll just wait and I'll just kind of tuck it in here, and I'm going to wait for the price to come down, and oftentimes it might come down like to this 23%, and it may bounce. Well, if it comes down and bounces, see if I can draw. Yeah. So say this price comes down, it bounces on my 23, and then it comes back up, and it retests the top of the wedge. Well, now I can just go and take this and I can draw it like this.
Yeah. So it's
see that
a wedge. Yeah.
And then when the price comes down and it breaks, well, now I've got my little wedge. I'm looking, and so now I'm looking at once it breaks this wedge here, then it's a pretty good indication it's going to come down and retest this area. And usually, a lot of times it'll go to the full 1%. Usually, the first move it may only go to the 61.8 to the 78. And if it goes down to 78, a lot of times it'll bounce back and then it'll come retest this one. It'll bounce back, come and retest this one. So this is why I usually draw the box. And what I'll usually do the first time, I'll usually draw the box right between the 78 and the 1. Use this as my target. Where's my target? Right there. And then what I'll do is I'll just sort of slide this up about halfway to give me a little, just because I don't like to fight trying to get those last couple pips. So if it falls, if it comes down here, great. But if it just comes down here, and I'll look and see, is there a Fibonacci line anywhere around here? And I'll say, oh, there's a green line right here. So in that case, I may go ahead and leave it down here like this,
Mhm.
because that way I know if it comes in here, it may come down to tag that. So that's no reason why I'll use these fib lines for, and you can see even like this red line here, it was, if we had this move here, there's the first move, came, let me just take this out of the way. And we went to, say that's this blue line right here. Well, look where this fib line is. Look where the price came. So if I use this for the first move and it broke my
The
wedge,
second, yeah, the wedge.
my target is right here. And I come over here, you can see it made my target. Here's my red fib line. So I probably would keep it with that. Actually, in this case, with a red fib line there, I may have actually moved it down this way a little bit, just because I knew this was the first breach, and I had a nice line. If these target areas overlap with another target area, that gives two confirmation that the price is probably going to be coming down to that area. Just like, so then it came down here. Oops. It came down. Okay, so it came down here. Now I leave this anchor, I just leave that right where it is. Move this one down to snap here. Let me get my snap shot here. We already made this target. I move it over, bring it over to the 0 line right at the top. Or the other thing, what sometimes I do a little bit too, is I'll just bring it to the top of the bodies and see if you get a little wick coming up into this red yellow zone. And then if it breaks the wedge, again, here's my target. My target's going to be right here between my 78 and the 1. And oh, look, here's a green fib line. So I'll just use that. Okay. And I could maybe pull it down maybe halfway this way to give this a little bit more room. I'd rather just see it come in here and know that this green fib line is right down here and just use that. But if this thing breaks the wedge, here's my target. So my target is going to be from the 0 to the 1 to 100 to the 1, and then you know that that's the same length as what this is.
Oh.
And you also see where we've been doing a little bit where we actually draw the wedge inside the target we'll draw it like this. And then we see where it broke the wedge, bring it on down and say, okay, here's our target. And there's a high probability that it will go at least this length, maybe a little bit more often than not. Okay. Any other questions or additions or?
No, that was awesome. Thank you so
Okay.
much.
Does that make things a little bit clearer for you?
Yes, it does.
Okay.
Yes.
Yeah. Good.
Sure.
Another thing that we've been seeing a lot, and I've been doing this a little bit with the S&P 500 index, is that when you get a nice strong move coming down, and especially if you're just going for a few pips or so, as this thing pulls back, and when you get the break and we get some other confirmations, a lot of times I'll just try and take this little area right here between this blue and these double lines. I just go for that. And like for instance, on this, I mean, you don't have a lot of pips there. Let me see what the range of that is. That's let's see. It's I can already see it here. Let me adjust something here. I'll take that 40 level off. Take that one off there. A lot of times you will see it'll go from the see, it's the 0.716 to 7153. You can see this is actually your 7 pips right here. So if it pulls back, so in other words, like right now, if this thing were to pull back as far as this right now, we're at between 50% and 61% retracement of this whole move. So it's come up almost over halfway up. And if it breaks down and it can break through you start getting like a moving average crossover on the 1 minute chart. And if we start seeing like the screen cross over the yellow off of this wedge, a lot of times what I'll try and do is I'll try and get into trade when you start seeing that this thing's starting to retrace. If you can go and grab, a lot of times I'll put a buy stop in right here, or there's no, excuse me, a sell stop. Enter the sell, and I'll oftentimes, and this is a kind of a quick scalp, but it really works pretty well on like these on the S&P. And this would be my target. Just go from blue line to the green line, and with that, you pretty much have you just about have your 7 pips. But you have to wait till these moving averages cross over. This thing's still going up. So now then I would move this up here. I move this one up here, and I wait. If I get actually this might even actually work for us tonight here, possibly. We'll see where our strength meter is showing on the higher time frames. This is Aussie. Aussie's showing strength here, not by much. The Aussie showing strength on 5. So right now we have Aussie strength. So we did have a nice down move earlier. In fact, I caught that. I was hoping somebody was. I'll show you that setup. But you see how these are starting to cross over here on the 1 minute? We'll see how this will work. The RSIs came up to the extension. The moving averages, the 5 and the 13 are starting to cross over. And if we can get the 5 to cross over the yellow and everything pointing down, get some strength here. We've got some dollar strength coming up over here. What I would do is I come over here and I would do a sell stop at 71, at what's the price, 71.62. And I go sell 71. 62. 7 pips take profit. And you find out it's going to be pretty much like, well, actually take profit is going to be right here at the 71.55, which is right where we have it. Stop loss for 10, which would be put it pretty much right up. I usually like to put my stop on the other side of this red line, which would be this would be at 71.77. And I set my order. So my stop's up here. Entries here. And my target's right here. And if you're doing like the S&P futures, that little move right here could be as much as a $4 or $5 move. And you could be talking some serious money just by this little scalp right here. And let's see something here as we. Matt, are you still here? Or do you lose Matt?
I am still here.
Okay, I just wasn't sure if I put you to sleep or if.
No. I was paying attention, and no, it's a really good explanation. I was really impressed.
So Pedro, does that help?
Yes, sir. Absolutely.
Yeah, you try that. If you see the S&P, let me see where if I have it here. And it works on gold as well too. We've been working with this a little bit with the S&P and gold alike. See if I can find it. This is a lot of mess there. This was a gold alert we had, and it really hasn't done anything yet. Here's the Aussie trade that I did earlier, and this was the wedge alert. Let me just take some of this stuff off. One thing I'm starting to do a little bit, especially on these evening sessions or where we have very little bit of movement or just coming out of the overnight session, is when we get these alerts, especially like this time of night, I've taken the 15-minute candle just before the alert, because usually there's just not that much range this time of night. I'll just build a box right around that candle just before where the alert was, because oftentimes you just can't really get much of a wedge because there just isn't enough movement. But I did draw a wedge, and okay, let me just take this one from the beginning of how I drew this one. I'll clear this all up, and this one was, where are those here? I'm not sure why those are there. Okay, so here was the alert was at 7:15. That was, I believe that was what it was. It was, yeah, 1915. So it was right here. And especially like when you can see this is a whole new day. We're just getting into the evening session. Now the Aussie is not too bad to trade after 9:30 because they're just starting to come to work. But I like this little candle right here before the wedge, because a lot of times what's been happening, we've been getting these wedge alerts and they've been like developing like right away, and we hardly even get a chance to get into it. But if I take this and just draw a box around here, and this is the first just a range box. And what I want to see is I'd like to see a 5-minute candle. Let me check this out, just see if it works for you a little bit. Go on a 5-minute chart, and when you get 2 candles to close consecutively outside the box, like this was the first candle, this one came back up, it went back into the box, so therefore it doesn't count. Here's another red candle coming down out of the box, second candle out of the box. When you do that, you can take the trade. You may want to wait. If you want to wait for a pullback, that's fine, but you can just maybe start bringing little sell orders in, sell stops in as this blue candle comes, and get in the trade. And you can see it didn't close back into the wedge, into the box. And then we had a nice little break coming down. And this would have been, I'm not sure how much this one would have been. This one would have been, you've had 24 pips on that little move right there. So, but go back to our original diagram. So it was an ascending wedge. So basically ascending tells me that I'm going to start at the top and I want to find a point that goes from low to high. And you see this point right here is a little bit lower than this one. So this is probably the area that I could be looking at for the smaller wedge area right in here. Oftentimes you'll see a nice big move down, forms a little wedge, and you get a chance, as we were looking at that other example. But from this one, I would probably start with, I'd probably start within the day's range. So this is ascending. So I'm going to start with the A up there, with the B down here, move my C up to the top of that, and I'll bring it down to the bottom of where this box is. And that would be the wedge that I would be drawing. And you can see it didn't give a lot of time before it started to break out of the bottom here. I would still want to see it close, something happen below this, where the D is, if it's going to the short side. And if you look now, so let's tweak this over on a lower time frame. Here's my 15-minute candle basically area. Here's the D. Now, as we draw this, we can tweak this. So I can move this one over here and try and tuck this in as close as I can without, and try and get an anchor. Here's a hit, some other hits out here someplace. Here's an anchor, here's a near hit, here's a hit. So there's a valid trend line on that one. So I can make a valid trend line from my A from the A to the C. Fix this up here a little bit. There we go. And I'm going to validate this one, confirm it. Here's my confirmed top of the wedge. This one hasn't been confirmed yet, and then here's the break. Now this broke. Now you see how these moving averages kind of crossed over, and so that's a good sign. As they cross over, and you get all of the consolidation right here. The yellow, the green, and the white are all right here at this wedge break. That's what made this wedge. So that's what one reason that made this thing work very well. And I'm going to draw my double trend line to try and find out my 2-pip range. We haven't been doing this a whole lot, but I think I'm gonna go back to doing this a little bit more. And I'm just gonna come down.
Yeah, it adds that little bit of what would you say? Like maybe an additional confirmation, a little bit more wiggle room because we're going down to low time frames, right?
Yeah, it's just a little bit of a buffer area.
That's the right word.
Enters to sell. And actually the way we started doing it this way, and then I got to looking at, well, here's a D, here's a B. This is really the area that if it breaks, if this is the anchor and this is a pivot, and it breaks the wedge up here, you really have a little bit of an area where this is still a pivot that's going to have to get through. Now the question is, there's enough room from where it breaks to get down here? Is there enough room to make it worth taking that trade? And you'll see at this point, that's basically 6 pips. So that's not a bad range, but you have to understand that you're still not going to get right in pretty much. But if you can get your fill inside this zone, that's not a bad place to get the fill. And so here it is. We had the break. We had a red candle, broke the wedge. Now we're on a 1-minute chart now. And remember we said before is that we usually have I want to see 2 closes on a 1-minute chart. I like to see 2 red candles close outside the wedge, have a retrace back towards the wedge or inside our zone here, and then take the trade. So here you can see with this one, we had nice break. There's 1 candle, 2 candle. Now you see you have to pull back into retest the wedge. What I like to do is I like to put my sell stop in right at the bottom, right about there. I like to put a sell stop in. That'd be enter to sell. And that way, if you're up here, and if this thing just comes up and keeps on going, you're not going to get in. But if it comes up here and tags the zone and comes back, then you're in on this red candle. And now you have your price locked in. If it just touches it, it may not fill, but it goes through. Now you're going to get the fill, and now you're off to the races. And you can see that now from this point to where the D is, you may not. This thing, it should get you at least profitable. And that's 4 pips. You have a 1.4 pip spread, so you'd still at least be profitable if it bounced off of this and retested. You're still okay because you still got and you can see where it retested right about where you would have gotten in. Bounced, but came through, retested it, and then you can see where it took the. There was a 20-minute, 30-minute moving average someplace here. There it is. And so once that broke, now you're off to the races, and you can just pretty much just follow this upper 62. But whenever this thing crosses over, that's where you start running into problems. Then it may retrace. But if you're on a 5-minute chart, it might have been okay. Now I got into this trade a little bit late. I got pretty much into the round off of this break here is where I got into this one. But I was able to catch it all the way down to the 30-minute 62. And this is a very significant Fibonacci level, the 62, this 30-minute. You'll see a lot of bounces off of that. You'll see bounces off this 5-minute, which is the purple one. And you'll see bounces off the 15, which is the orange one. And again, what I'll do is I'll just put a line and draw it so I can see where these levels are on my 1-minute chart. There's a 15. Over here is my 5 with the purple one. I'll draw that. And then I have, now I can be looking at my 1-minute chart And now I've got all three of them right here. I've got my 5 by 13, and the best one. If these can't hold, it's going down to this test this one out. And you can see how this thing just followed it right on down to boom.
The other day I was testing, I was going back.
Okay.
Yeah, yes.
Any other questions?
No, more like a comment. Can you hear me?
Barely. Can you try getting a little bit louder?
Hold on.
Seems like
Can
you
you-
were really far away from your mic. You're good now.
Can you hear me now?
Oh, that's
Yeah.
perfect. Yeah, perfect.
Okay, cool. The other day, I was actually back testing and looking at trend lines, and I kind of going back to what you're saying. I was on a 1 minute chart. I was looking at the 1 minute 62,
Uh-huh.
the white line, and then the green line, and I kind of seemed a lot of patterns every time, or most of the times, that once it breaks the wedge and the green breaks on the downtrend or to the uptrend, it breaks the 1 minute 62, and it develops a decent like gap. I was actually put a two.
Yeah. Uh-huh.
It was looking for like confirmations, and I was went to look at a bunch of other alerts and following the same pattern, and it seemed like they were working. But then I started using it in real time, and I'm like, okay, that's not working. So I might need to look into that a little bit more. But I was looking at the gap of 2.5 pips. If everything.
You're talking about the gap between the white and the yellow?
No,
Or
the
between
white and the green.
the white and the green. Okay.
Yes, and I don't know. I was like backtesting and looking at these as like a point of entry, and it looked promising. But then I took a few in real time, and it didn't work out. But
Yeah. I wouldn't worry too much about the pip value between that. One thing I look a lot is that when you get the crossover, like you have up here, here's where you got the crossover. And you see how this green line came up, it retested the yellow, but it couldn't cross. If you see the cup come up and can't cross and starts curling back down, you're still good to go. You're still good to stay in. It's when it crosses back over like it did here. Like if you're going up and it comes, as you see all the way up here, it's like here it kind of crossed, came back, tested it, but didn't cross. Came up, tested it, didn't cross. Came up, and you can see where this gap is getting bigger and bigger and bigger. And but I even did this today, is that I drew the stick right where the cross was. So here's our stick, and what I did is I put it between the white and the yellow. Okay, and so I'm seeing now. I'm just kind of following the white one and seeing how if the gap's getting further away. You can see the gap's getting further away.
yes,
Now I bring it down. I bring it down. I can bring it down. The gap's getting further away. I bring it down. I bring it. I'm following the top line here. I bring it down, and now I'm seeing that now the gap's starting to get shorter.
Yep.
Okay, and then when you start seeing it getting shorter, that's a sign that maybe things are going to start curling around for you. And sure enough, here's where it did. But when this thing starts to flatten out a little bit, that's when this thing's going to be coming down at the same angle rate. But as this thing starts to flatten out and level off here, that's going to get a little bit shorter, and that's going to be your first sign that things are starting the energy is starting to change a little bit. Okay.
Yes.
And you see, like right here, here's a green came down. See, it came right on up. Tested. It didn't cross right there. If you can see that, it just didn't really cross. It just came right up to it. This one, and you had a nice little wick up here, and then you had another red candle close to this one, close to this wick. I like seeing like this a red candle to break the bottom of the next two blue candles, and that's a strong move. And then you're probably pretty good to go for the next run. And then you still look, see if it's getting wider and wider and wider. You can take it here with your stick and just follow it down. Oh, it's getting wider. Okay, we'll move it down a little bit further. Move it down, move it down, move it down. Oh, it's getting a little wider. Move it down, move it down. It's getting a little wider. And now you move it down. Instead of just following the top of the yellow one. And now I'm seeing that now it's starting to break through here. That's an idea that, oh, maybe things are getting to an end here. And then you start looking for that turnaround. And once you get a candle that closes, you use like this top of this red candle, flatten it out. If I get a close above that, I'm out of there. And then this now becomes as this thing comes up, I'm looking at this is going to be my new demand zone, because there's where the price came in strong and it left strong. So the theory here is that from this point into here, these are where there's some unfilled orders. In other words, the sellers came down, sellers came in, and now the buyers kicked in. Well, the sellers still may have some more. There may be, as the buyers start driving the price up, there may still be some more buy orders here. So when the price comes down, so here's my demand zone. Let's see, demands. Let's see, where's my demand zone? There it is. So here's my demand zone. Strong red candles down, comes back. Here's the first candle that breaks through the top of that. Here's my demand zone. Well, look what happened. It came up. Look what happened. It came right down into it, found some more buy orders, and shot back up again. And you can see this happening over and over and over again. Then the buyers came up, drove it up, but now the sellers came in, shoot up, no more buy orders here, came down, broke down. Well, now we have a new demand zone. Now the demand zone's over here. And I'm going to bring it down, just like that. There's some more buy orders here. There were some buy orders here. They got all chewed up. More now that some buy orders here, comes back up, comes in, retests it. Buyers take it up, and all the buy orders are gone. Comes back down here. Here's the 30-minute 62 right here. Strong area of support. Put my demand zone in here. And now we wait. So as this thing comes down, now we just run this thing over, and there's nothing over here. Nothing's challenged us yet. And guess what? Here's the 62 right here. And I would be willing to bet when this thing comes back down, this could come down, it's going to retest this area. But here's where the buyers took over and the sellers didn't have anything to sell until it gets up here. And you also see this is where the break of the wedge was. You see this little consolidation, little basing right here. I would be willing to say that if you draw a box from here, this would be a supply zone. Draw it right here. So we have, this is the area of consolidation. I call it basing. I take this over here. Oh, guess what happened? Boom. Came up here, found some more supply. Sellers are coming back in. Things are starting to slow up. Things are starting to, and this is right here where that alert came in, as a matter of fact, right here. This is the box where the alert came in. So there's something right in this area. And I'll bet if I put a Fibonacci line in there, they're going to find something. There's my green Fibonacci line. Demand, it's just to be supply. Let me change this. So here's the supply. As just says, there's a lot of orders up here. Comes up here, grabs some orders, comes on down. There just happens to be where the fib line is. So you have a fib line, you have a supply line, you have the box that the wedge alert came in, and you have these things are starting to curl over. And if it breaks through here, you're probably going to be looking at, now you've got a 562, right, with a 1 minute 62. And so this is going to be a pretty strong area right here. And oh, guess what happens? Here's the fib line. The blue fib line is right here as well. So you have 3 confirmations that you're going to get a bounce off of this area. Make sense?
It sure does.
Doesn't always work, but it's the more of these different factors you can get at an area, the stronger the area becomes.
Yep.
And oftentimes these moving averages it just happens all the time. But this is about what we call energy points. This would be an
Sure
energy
do.
point.
Yeah, they just cross. Once they cross, impulsivity shifts. You see
Yeah.
how once it finally decided to cross, once the 62 decided to cross the 5 and the 13, that is the end of that downward move, and it's actually the up move. So if you actually put a trend line from the top of the move to the bottom, it's going to be almost where that cross is by the time it left. If you go left a little bit, Al.
Oh, I was looking at something else to go left.
No,
Oh,
you're
where?
fine. So if you put like a trend line from the top of the run to the bottom of the run, you'll find out that the cross will be around where the wedge would intersect. Like you can make a wedge on there,
Like from this,
at least from what I can see.
from the bottom of this run to here. Is that what you're talking about?
No, from the left.
From here? Or
Left. No, more left. The other left.
Oh, the other.
Yeah,
right.
exactly. So when you go down from that high that's on top
This
of
high,
the
right
62,
here. Uh-huh.
and then
So
you draw a trend line towards the
You're talking about this one right here? For this?
here.
From
Let
there?
me
You want control?
let me see if I can just control your screen. How about
Okay,
that?
let me give you control here.
Do you want to? I guess I can't
Here.
control your screen.
I should be able to let you do that here.
Oh, I
control.
can.
Here.
I got it. Request.
Yeah, there you go. Proof.
Cool.
Okay, you got it.
Let's test it. Click to start mouse. Oh yeah. Okay, so this is what I was looking at. Let's go. Oh, it's so tiny. Trend line here. So right here. Kind of like that. Not 100%, but that's not going to work. This would be the wedge here if you were looking at the wedge, but what I like to do sometimes is to extend the why is this is really hard to do. I guess we won't take over someone's screen anymore. But anyway, check this out. I just saw this and I was like, oh man, I gotta put this on here.
There's your stick.
There's my stick, and check the length. So the
Want me to move it
okay.
for you?
Anyway, yeah,
I'll
I'm
move-
gonna
I'll-
stop. That's
Okay, I'll move it for you here. Where you want it?
oh, at the bottom.
Right here.
Yeah. Did it make it?
Yep.
It
sure
did. Look at
Yep.
that. Made it to the bottom. And look here. So this trend line was really solid. Okay, you got it. I didn't adjust it perfectly, but anyway, it's going to be bounce, 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 break, and huge break. And then you can extend your trend lines. So once it finally goes up, you're now breaking the channel. The price
Right.
channel is here. Well, guess what? The wedge is part of that channel, the upper line of that channel. And if a person, this might work, this might not. This might not work, but sometimes I've seen where you extend this one out and you might end up getting some nice trades if it's I can't see the wick properly right there. Anyway, if you put it on the wick, sometimes these, and then you've actually got another wedge here where the breakout is. It's not going to be perfect because it's laggy and hard to control, but anyway. So there's going to be wedges all over the place. this is not great. So, but the wedge is there. I just can't put it on there. I'm just gonna give up remote control. I think
Okay.
that's the button. There you go.
Okay.
Anyway, so yeah, it's
Here-
that's why.
Yeah. But here's one thing you see. It came up into supply.
Yeah.
We're getting the crossover right now.
Yeah.
And we're getting another little wedge. Here's another little wedge that's forming. And what I'm going to do is I'm going to use this bottom of this blue run right here. Here is a run. Here's a rally, a little bit of basing, rallied again, coming back up. So I'm going to use the origin of this for that point of the wedge. I'm going to use the blue candle, and here's the break. But now it's going to break. It's coming, but it's coming right into. Let me move this one out of the way. You see, it's coming right into the 62s, the 5 and the 1 minute 62. But here's a break. Now, would there be enough room to take this trade? I'm not so sure. Let's see, that's you only have 3 pips. But what I'd be looking at, since this is such a strong move up, I'd be looking for it to come down, maybe take a bounce off of here.
Mm.
And if it bounces, come back and retest, and then you actually have a little bit of a shot at because you have this trend from here. Move this one out of the way. We have a trend going from here. Here's the anchor. Here's a hit. Here's the bottom of the wedge. Here's the top of the wedge. Now this is kind of what we were talking about with the retracement. So if there's enough energy on this move up, and we get a nice, this is a relatively strong move. And this goes back to what the original question that we had earlier today about this Fibonacci retracement. I would start from here, take it up to the top, see how far of a pullback I get. So right now, this thing is pulled back 38%. A 38% pullback, when it, if these moving averages start crossing back over again to go up, now you're looking at this target up here. It probably would break this. It could break this supply zone. It may have some trouble getting through there, but here's your fib line. Here's your target zone. And if there's enough upward momentum, here's your target. And that's all after this nice move here. Here's what, well, look at this. I would be willing to say, if I start, here's where the bottom was. If so, it came off our 30 minute 62, strong move up. It retraced right into here. Look for my 1-to-1 target. My 1-to-1 target is, actually it's, in this particular case, it would have been, wait a minute, I didn't do that right. Or did I?
Yeah.
This little pullback here was only 23% pullback. And so I'll be looking at, well, the end of this move here with a little bit of pullback and comes back up again. You can see where it came up to the 61.8.
But it could still go up.
But it
so
could still go up. It could
still
still reach this area. It
Let's
could
have
still
a
reach
target.
this.
the same target mark, the same target.
Yep. Now this target would actually be readjusted to this area up here. This would be the ultimate target off this big move. This would be the ultimate target, which is just on the other side of where all this happened earlier. This would kind of be like the overshoot of where this whole move started down. If it comes up here, this would be over this white line. This is where the where that alert came in. Here's the target. This thing could very well go back up and retest that area.
So the smaller retracement, the bigger potential of continue to follow the same trend.
Exactly. So there's so this one, but you can see. Remember I told you about this blue line. If you pull it back, get in at the blue line on the break of the blue line. My stop is down here. Here's my green. Here's the next one. This thing still has room to the upside. Let's see what our RCS tool's saying. Yeah, see this on the, we're on a 1 minute chart. Let's see what it looks like on all three time frames. Aussie is strong, a lot of strength on the Aussie right now to the upside. This could very well hit this target. Strong by 4, strong by 6, or 5. Well, let's just pull back a little bit here. This is on the pullback right now. Go back to my 1 minute chart. Broke the wedge, coming back up. This was a head fake right here. Now I just look at this move from this move. Let's find the bottom of this thing. This was a stronger move. See how the angle, this is much stronger. This one's a little bit more, a little bit lazier. When you get really strong moves like this one, this usually works a little bit better. This one may have a little problem getting through here, but you can still do it. You can still use this as a, if it breaks through the top of this angle right here. Actually, remember I told you, I was saying about the trend lines. I would take this in over here.
Yep.
And make a trend line off of this to the bottom. Here's the break. Here's the crossover. See the crossover of the 5 and 13?
Mm-hmm.
There's a crossover. And here would be the target. The target's still pretty much the same target zone. Just a little bit smaller because it's a little shorter. Still the same target zone. And actually, I like this a little bit better because it's inside where this pivot was. Actually, we could move this one up. This one actually did. It's not where the, actually, that's just pretty much where the alert was. So move this up to there. Got a nice little wick, came up, retested this area. It's finding some seller. See how here's a high, here's a lower high.
It's forming a wedge.
It's yep. So now if it breaks this area,
Yeah.
we can
Goes
draw
up.
our stick. We can draw our stick. And if it breaks the top, here's our target. 61.8. Or if it breaks the bottom, and here would be the target here. Same distance.
Mm-hmm.
And here's the third, here's the middle third, and then here's the bottom third. And it looks like this thing has room to the upside. Let's see what's the value of that one. Actually, I need to put my labels back on so I can see what they're doing. Indicator value labels here. There we go. I can see what the value is on this. 7 and a 3. Strength to the Aussie. But I like to see it break this little, because like I say, right now, all I did was I just able to draw a little triangle off of this retracement tool. And that also gives me my targets then, all with the same tool then. But it broke this on the bottom, didn't go anywhere, came back into the wedge. So this one is now more like this. And it's not confirmed. Okay. Anything else? Anything else we can help you with before we call it a night?
No, that was awesome.
Okay, good. Well, Pedro, I'm glad you were here. I appreciate you asking questions. And this is one of the nice things about these, the late evenings. We don't usually have a lot of people show up. And if someone's here, we're happy to go over some of these problems to give you a little bit of one-on-one coaching. We're okay with that.
Sounds good. I appreciate
Matt, thanks for being here tonight, Matt.
Absolutely.
And we'll
Not
see
that
you,
but we'll catch you guys early in the morning.
see you in the morning, and
See you in the morning.
everyone have a good night.
You too. Thanks.
Absolutely. You too.
All right, take care.
Bye.
Bye, guys.
Bye.